Your time, sir. My time? Yeah. Oh, I make that a long time ago. It's not the same obstacle. We gotta get under. And for you too. Head on first. Good job. C'est pas une grande enceinte. La dune ici. Ah oui. Ah, le SO. Le PSO. Le PSO hier. Depuis hier, ouais. Non, trop. Yes, run the road. Good job.
Use your rifle, push the sea wire up and away from you. Crawl underneath. Hey, knucklehead, quit using your damn hand. I've told you like 4 times. Use your freaking rifle and push it up. All right, I found both security. Go, quickly. Come on, Gail. Doing good. Let's go, Gail. Get the out of there. Let's go, Gail. Get out of there. Use your rifle. Push it up. Hey. Quit fighting this. Use your rifle. Push it up.
How is this training beneficial for you guys? What are you getting out of it?
Different environments. It's actually, last time we trained up was in a mountainous environment up in Bridgeport. Really cold.
Hurry up!
Like getting thrown in the jungle, completely different. Getting us used to different things.
Hurry up!
How is this supposed to benefit you in the future? I mean, there's no jungles in Afghanistan. What do you guys get out of this?
We train, fight, for anything. So, just, I guess, just in case anything pops up anywhere else, we're putting in a jungle environment. We'll be ready for it.
Hey, hurry up. All right. On the rest of this thing without boss on. Down a little bit. Slide him down a bit. Slide him down. Look up, but there you go. I'm gonna lift up his back. Let's go. Get that. Good. Who's that on the stretcher there? I'm looking out for you, man. Stay low. Unsling your rifle. Get over the wall. Profile. Get down there and low crawl. Low crawl. Low profile over the wall. Maintain your. Get down there and low crawl. Try and hold on to it this time. Right there. Let's go. Unsling your rifle. Let's go. What do you right? Unsling your rifle. Throw your leg over. Push. Good. Get it. Conceal the Marine. If you are out of the obstacles, get in the jungle. Give it up. Attaboy. There you go. Use the rifle, push it up and away from you. Crawl. Rifle crawl all the way? Push the wire up with the rifle. Crawl underneath. Go, guys, you got it! Got it. Oh, yeah, we're gonna 1, 2, 3, push. 1, 2, 3, push. 1, let's go. We're almost done. Hurry up. Come on. Shoulder. Get on your shoulder. There. Keep it going. Keep it going. Hey, get some up front. Up front. Up front.
I got it.
Two. Three. Got it. Drop it.
Let's go.
Pass it. You got it?
Yeah.
Tomorrow. Get him up here. How are we going to go? Charlie! I'm going to kill some Charlie! Carol! Van Dyke, keep your security. 20, 21, 22. A little bit. Right on that foot. Going behind you. You take point. On the flat side. Got anything, Watt? No, keep pushing. Reloading. I got you. 9, 10, 11, 12, 13, 14, 54, 55, 56, 57, 58, 59, 60, 61. One, pushing off to the side. Left. We got a corner. Sykes. Try and move high on that corner. I'll move with you. Pushing around over here. All kinds of fire. Pushing down this draw. Coming in on the right over your head. Move up. Rhodes, get him on the right side. Still coming down. Go around. You see it. You see muzzle flashes on both sides of the draw down there. Coming all over your position right now. All over your position right now. Still coming down on you, Rhodes. Rhodes, you. Hey, you're pinned down left side. Pinned down. Round still coming down. Still coming down from all over the. Rhodes. Move up. Where else can you go? Besides straight up the straw.
And go.
Today we were doing the point man reaction course, and it is relevant to what we do because it gives us good situational awareness and it gives us good reaction time, knowing where our enemy's at and being able to find them quickly.
I want to give a shout out to Coops Bro.
And go.
Today we were operating in a jungle environment which involves steep, muddy terrain. Although we've been fighting in the Middle East for the past 12 years, as Marines, it's important to operate in every type of environment, which makes this training very valuable.
Like this. Up right here. All right, come on up. Did you guys ID them down there?
Yeah, I got ID on anything that's around the Humvees.
Yeah. Jingoist, tell them we talked about yesterday with the mediums looking through the grass. That's why they couldn't see them. These guys could see everything you're doing. The looks on our face. See, also, we didn't do everything perfectly until it's hasty, but right. Put it up this way. But you want to gather from the sides or behind, not in front of you. That ruins your screens. Well, it starts like this, but one thing really important right here is this 550 cord that we tie on.
All right, let's get right into our morning PT. Jumper jacks. touches. Run in place. Shoulder rotations. To the back, front, elbows to knees. High knees. Jumper jacks. Place. Elbows, knees. Done. All right, right. Good morning. All right. Let's get into our motivational video this morning for our mindset.
Imagination is more important than knowledge.
Oh, shit.
The true sign of intelligence is not knowledge, but imagination. Imagination is everything. It is the preview of life's coming attractions. There is perhaps no stronger trait.
There we go.
Imagination is more important than knowledge. The true sign of intelligence is not knowledge, but imagination. Imagination is everything. It is the preview of life's coming attractions. There is perhaps no stronger trait that one could have than that of a strong imagination. Imagination is everything, because without it, we cannot create anything new. Imagination is the preview of life's coming attractions, because without it, we are guaranteed to repeat the same patterns, make the same mistakes, and live the same life over and over again. With it, there are no limits. There's no limit to what we could attempt, no limit to how high we could soar, how big we could dream. Sure, our dreams might end in the dust, but what if they don't? Would you rather live having tried to reach the life you want, or die with regret? We need to let go of our need to fit into this small box society placed us in. And we must imagine the life we really want. Then, when we are certain what that life is, we have to go for it. We only get one shot at this miracle of human life. Live it fully and exactly how you want. Sure, we all have dreams. The problem is, most people stuff their dreams in the closet when things get hard. When life presents challenges, most people turn to what they know. They turn to what is easy. But the easy road and the known will never lead you to your dreams. There are only two ways to live your life. One is as though nothing is a miracle. The other, as though everything is a miracle. He who can no longer pause to wonder and stand wrapped in awe is as good as dead. His eyes are closed. It really is that simple. It really is a choice. No matter the circumstance of our life, we can choose to see everything around us as a miracle. The very fact that we are here in a human body is said to be a 1 in 400 trillion chance. Very few of us believe we are a walking miracle. Sadly, so many people are walking around, living in their head, pessimistic of the future and bitter from the past, so much so that they are missing the miracles in the present. Open your eyes and open your heart to the magic all around you, the miracle of human and animal life, the miracles of nature, the miracle of you, and what you're really capable of when you let go of caring what other people think of you. Choose from this very moment on in your life to seek and find the miracles around you. Great spirits have all.
For just $67, you can make as many videos as you want, and you never need to pick up a camera.
Always encountered violent opposition from mediocre minds. Albert Einstein. They say the only things guaranteed in life are death and taxes. You can add to that list the impossibility to please everyone. The simple fact is, when you want to change, as in when you want to better your life, there will be opposition. And unfortunately, that opposition is most likely to come from people close to you. Many people won't like your advancement because it will remind them of their lack of it. Many people won't agree with your direction because it will remind them of their lack of it. No matter what or who the opposition, you must stay true to you and true to what is right. Do the right thing by others, and most importantly, by yourself. Those who matter will come around eventually, and those who don't matter. Live your life with purpose, intention, full of spirit, and make no apologies to mediocre minds for dreaming and living big. We cannot solve our problems with the same thinking we used when we created them. Insanity. Doing the same thing over and over again and expecting different results. Yes, we must dream big. Yes, we must try new things. But if life is not going the way you planned, perhaps it is time to try a different approach. You don't need to change your goal, but you might need to change the road you take to get to it. Never stop learning and developing yourself. You will find a way. A person who never made a mistake, never tried anything new. The fact that you're committed to grow, learn more, and be more almost guarantees you will make mistakes and fail somewhere, somehow along the way. Remember, it is only considered a failure though if you give up. Keep at it. Learn the lesson and allow it to serve you. Don't let anyone discourage you because of mistakes. It is a guaranteed trait of all winners and curious seekers. Learn from yesterday. Live for today. Hope for tomorrow. The important thing is not to stop questioning. Curiosity has its own reason for existing. I have no special talents. I am only passionately curious. Never stop questioning everything in your life. Be so present and in touch with yourself that you can feel when it's time for change. Never lose that childlike curiosity to learn more, develop more, and discover more. Never lose hope that your best is yet to come. Never lose that knowing that you are a miracle. Never lose that presence that not many people have. Strive not to be a success, but rather be of value. Add value wherever and whenever possible. Not just in your work life, but in all interactions with everyone. Then you will be a success. You will have more riches than money can buy.
I like that last quote. Life is like a bicycle. You got to keep moving. That's the same thing with trading. You got to keep moving. So I like that video. Good stuff. All right, let's get into our training exercise for today.
For mindset, it is this. Jim Rohn, I did tell you, I know I share a lot of quotes from Jim Rohn. This man is filled with wisdom. I swear he had a calling on this earth when he was alive to be able to lift and inspire the world and to teach us principles. He's just one of those sages throughout history who has shared tremendous insights. And he shares this. He says, success is 20% skills and 80% strategy. Now, when we learn to master the skill of trading, really it comes down to understanding the key components, the basic market fundamentals, how to, the vocabulary, the terminology, all of those kind of key concepts that were with regards to the market. But when it really comes down to it, what makes the difference between different people who all come to the same class, essentially? And that really comes down to the execution of their strategy. And the effective use of a strategy can really distinguish and differentiate each person in their level of performance. You'll see sometimes on the flyers, people have asked about different people that we've posted on the flyers. You say, man, it just seems like that person is always winning. Well, why is that? It's because they're effectively executing a given strategy, right? We see this in various games, whether it's in a sports, whether it's in chess. If you took a Rubik's Cube, if you're familiar with a Rubik's Cube, there are various strategies on how somebody solves that in a certain amount of time. And depending on their ability to execute that strategy effectively, that determines their ability to win. And so much of what we do in the market comes down to effective execution of strategy. So that's kind of what he's alluding to there. And so, and just to reiterate that, most games are not won by effort alone, but by carefully executed strategy. You see, everybody out on the court dribbles the ball. Everybody's running back and forth. They're all putting forth an effort. They all have worked up a sweat. Their hearts are beating fast. So what really separates the winners from the losers? It really comes down to effective execution of a strategy. And so the market is no different. And so as we talk throughout this week about strategy, just kind of keep these thoughts in mind and the importance of effectively executing a given strategy. Now, we always like to remind you of how we make money. Why is this important? Because again, this is one of the basic fundamentals. You have to understand, what are the rules of the game? And when you understand the rules of the game, you know how to utilize them to your benefit so that they're not working against you. So we make our money in HFX with two variables: price direction. So we're making a short-term prediction of which direction is price going to go. Is it up? Is it down? Then we are going to have a time expiration affixed to every single trade we take. That time expiration is a variable, meaning we can choose whether it's 1 minute, 2 minutes, 3 minutes, 15 minutes, whatever time frame you choose. You can choose a month on some brokers and really lengthen that out. And so the question is not so much which time frame is best, but which time frame, in other words, which time expiration is best suited for the strategy you're employing and the direction that you're predicting. It's a combination of the two variables, and I'll show you an example of exactly how that plays out and why we come up with some of the basic rules and approaches that we do. Secondary to that, as part of our basic market fundamental, as a foundation, we have an objective trade decision process. This is not a strategy. This is a step-by-step process that you go through to apply your given strategy. First is to identify market phase. Second is to confirm that trade location or the phase with a technical indicator. And we'll show you some examples of that today. Thirdly is to enter the trade and have a specific trade entry reason. By identifying and going through this process in a consistent manner. Again, this is not the strategy. If you take this right now, do you know how to trade? No, you don't, because you don't have the strategy component. But this is the process that you will repeat every single time that you look for a trade setup. All right, so by understanding these key two variables, price direction and time expiration, and then going through a step-by-step process to identify which phase you're in. Is the market consolidating? Is it trending? Are we pre-market hours post? Are we in the beginning of a market phase, et cetera? Confirming that information with a technical indicator, which just simply provides a visual representation of where things are going. And then to have a specific and well-defined trade entry reason, which we've covered in the past, we'll cover again this week as we talk about strategy, but ultimately understanding this process and not compromising it. Why is that important? Because sometimes people will see a phase, they'll say, oh, it looks like the price is trending. It looks like the price is going up. So what do? They place a call option based upon one factor. They say price is trending, the secondary variable in the trade decision process, which is time expiration. They may be absolutely correct that price is going up. But if they get in at the wrong time, the price could actually retrace against them temporarily before then continuing in the primary trend direction. So even if they're correct in their first assessment of market phase, if they have not yet identified the location and the time that they need to be in the trade in order to win that trade, then they potentially could lose that trade opportunity. All right, even though they were basically correct on market phase. So this is why we go step by step through this process to make sure that we have identified accurately what phase we're in, how to confirm it, and then our specific trade entry reason. So to show you a simple example, just straight out of the gates here, let's take another look at Bitcoin. Now, we've kind of used this a number of times as an example, just to kind of, first of all, keep you connected to what some of these cryptocurrencies are doing, what the crypto market is doing at any given moment, but also to help you understand that these principles that we teach work on every single time frame that you trade upon, okay? And one of the things that we mentioned the other day was how price has broken out from this zigzag area here. And I'll remind you of that at this point. So price has been working kind of in a downtrend fashion, and I'll just skip over some of these pivot points, but essentially it's going down. We had some back and forth zigzagging, and then we had finally a breakout to the downside below this pivot point that gave us our W formation. Price came back up to retest this area and then made its primary push to the downward direction. And then price began to consolidate again. So we're identifying market phase. And so where are we at presently? Well, we had identified previously that the price had come down and then began to break out to the upside. And at the specific moment that we looked at the other day was right here. And I'm going to put a vertical line just on this candlestick right here. This was the one that we were looking at that moment. And you can go back in the video and you can verify that. The reason why I'm pointing this out is because first and foremost, we had identified that there was this breakout to the upside above this basic consolidation area. This is suggestive that we might be moving into an uptrending situation because these are the recent pivot points and price is broken out above them, suggesting that price may test to this general vicinity before then making a move in the upward direction. Okay, so that's what we're kind of waiting around for. But in the meantime, there are other structural elements that we can identify for potential trade setups based upon other price levels. One of which was this level here, okay, that we identified. Let me grab my brush tool here. So right here, we had identified that this was the most recent price level that price had broken out from, And so we did have a confirmation candle as price came back up to retest that basic level. We have, note this red candle here. So this was a confirmation candle in the downward direction. So if a person wanted to take that trade, they could actually take this trade. So our direction is in the downward direction. Why? Because this breakout was to the downward direction. It had retested this level. And so you could say, based on a strategy, that if you get a retest to this level and if you get a confirmation candle, you could take that trade for how long? This is the second variable, right? When we're looking at our two variables, how much time? Well, price may only be, this is a breakout to the upside. So a lot of price momentum is going in the upward direction. So we want to be noting that. But the fact that price is retesting to this level does suggest that it might go down temporarily. And so based upon that, how long do we take the trade? Well, let's just go through this candle by candle. Our standard rule is a 3-candle rule. And so I'll show you that first, just to show you how this would have played out. So if you'd taken the trade at the close of this red candle here, the red one, okay, your entry would be at that level. 1, 2, 3 candles. The price would close at the base of this candle, and it is definitely lower. I don't know if you can see that, but it is lower, and so that trade would have won. It would have been a 12-hour trade because we're on a 4-hour time frame chart. Anytime you're doing your analysis, if you're on a 5-minute time frame chart, make sure that you're doing your time expiration in relation to that time frame. You can't arbitrarily just choose a higher amount of time than the current chart that you're looking at, or a shorter amount of time, because the strategy does begin to influence how many of your trades will actually win. So in this case, this is the reason why the 3-candle rule is even in existence, is because it so often does win. It gives the price enough time to go in your intended direction and end up winning. But you could say, well, but Josh, the price overall has been going in the upward direction. The move that we're looking at is actually this particular breakout here, like we said, above this point here, and we're looking for a retracement back to this level before price then continues to go in the upward direction. That's the primary move that we are watching for. But that's not to say that we can't pay attention to a few other structures that price could respond to. And so in that particular instance, or in this example, we now have some rules, in other words, a strategy that we can follow based upon a process. Step 1, market phase. Where are we at? Well, we had a breakout to the upside, so it looks like an uptrend. So again, that's our primary move, but we were dealing with a breakout to the downside below this level here, okay, over at this level. And so the fact that that had occurred, we could consider a retest in this basic zone. Price had pushed up here into that zone. That's where we got our confirmation candle. And so that would be a valid trade setup. Step 2 is we could apply a technical indicator. We had talked last time about how the price has pushed to the upper Bollinger Band line. This is what you would see if you're using cash trap. You'll see sometimes the candles will push into one side of the Bollinger Band line, and what do we inevitably see? Price will eventually reverse. The Bollinger Band is a statistical tool that indicates that over 98% of the candle movement activity will occur inside of the top and bottom lines. Okay, and so that gives us an idea of the average amplitude of these wave formations. So we know that without fail that price is eventually going to start turning around. And so trading against the trend is always a little bit more risky, but knowing that there's this structure here, that gives valid reason to potentially take this trade. If we take it based on a 3-candle rule, we would have won the trade. But what if we chose a different amount of time? Okay, let's just say we took the trade. We saw this confirmation candle. We said, you know what? I think price is going to go in our direction. We take a candle, which in this case would be 4 hours worth of time. Well, that would have been for this green candle here, and we would have lost the trade. Well, what if we took a 2-candle trade? Price would have closed up here on this candle, and we would have lost that trade. And we would have lost that trade. 3-candle, we already know that that's one. And that's why we choose a 3-candle, why we even have a 3-candle rule, is because generally speaking, more often than not, it is enough time for price to move in your intended direction. More often than not. That's the only reason why it has ever become a basic rule to follow. Now, does it mean it's always right or it's always the best? Certainly not, but it's something. It is one strategy that you can utilize. And so our entries at the base of this red candle here, okay, the 4th candle would close up here. And so even though it would have been correct on a 3-candle, a 4-candle actually would have lost. If the price was moving up here, we rolled over this trade, and also we pushed into, instead of 3 candles, we were into 6, so 5, 6. Now price is way up here. So you can see that there has to be strategy and confidence in a strategy in order to execute it effectively. And so the rationale and reasoning behind a 3-candle rule is based upon backtesting. Backtesting essentially is looking at past data saying, okay, if price does this, then it does that. Here's why we would take a trade. We're going to follow with strictness our 3-step process of why we're going to take a trade. If you can't define these things, then you can't backtest. Backtesting only works if you have concrete reasons to take a trade, so that you can say with confidence exactly where you're getting in, where the trade would expire, and that's the only way that, with transparency even for yourself, that you can say that this is what would have happened. Otherwise, it's like, oh yeah, I definitely would have gotten in right here and right there and right here. No, you're fooling yourself into thinking you would get in at the right opportune moments, when in the reality is, as these candles are moving, a lot of people get psyched out. It messes with your emotions, and you begin to make subtle little mistakes as you're kind of going along. So knowing what your concrete rules are will really help you to create that consistency. So I just wanted to point out how that plays out and why the 3-candle rule is important, because even though, yes, our primary price movement is in the upward direction at this point, all of our technical indicators are suggesting that. For example, here on the RSI, we've got some movement way up here by the 60%. That's a good thing for this upward breakout, and then we're just simply looking for price to come back and retest. Now, it may not. It may come down to here and then just keep going up, and that's fine. But we have our area of interest where we're considering a trade location is basically at that level there. All right. And so knowing what your strategy is all of a sudden gives you a framework in which to work. Your emotions all of a sudden have some stability, because just like the lines on the road, when you drive your car out on the road and you have the yellow lines or the white lines on the road or whatnot, where depending on where you're at, the rules of your country, ultimately, what are those lines for? They're designed to be a guide and to give you some rules to follow, as well as all the other drivers. And what that does is it gives you confidence in which to drive down the road, knowing that you can get to your destination safely. And our trade strategy is similar. We can say, if we follow our strategy consistently, then we'll have more consistent results when it comes to our trading out, our profitability, etc. All right, so let's jump down some time frames. We're going to jump over to just a different pair. Let's go to the euro to US dollar. We're going to get rid of our indicators for a time being. And let's talk about the basics of any kind of strategy. When we look at our 3-step process of identifying market phase, why do we do that first? Well, we do this first because a trending strategy, as we identified yesterday, does not work during consolidation. And a consolidation-based strategy does not work during a trending phase. And so at any given time, the market is either consolidating, such as you'll see in certain times, like here is a consolidation phase. Right here, I'll show you a couple more of these. Right here is a basic consolidation phase. Okay. Right up here is consolidation. And these consolidation phases fit within sometimes overall trending conditions. Now, this can really confuse people because they're looking for one or the other, and they don't realize that they happen kind of simultaneously. And it essentially looks like this. Overall, price can be, in a sense, moving in a downward direction. Let's grab that tool back again. Okay, price can be consistently moving in a downward direction. We could see consistent breakout and retest as price is moving down. But during these retracements, they don't always just look like one perfect line and then one perfect line down. Oftentimes, instead, what you'll end up seeing is something like this. Price will go down, and then it will kind of go up and down and up and down and up and down. It'll consolidate for a little bit, and then it'll push down. And then it'll consolidate, and it'll go up and down and up and down and up and down, right? And so it'll just do that during some of these retracement times. And that's more what we see in this example. So price has broken down to the lower side below this previous consolidation phase. And so what is it doing? Comes back up, down, up, down. So price is still technically in a trending condition, but it's currently in a consolidation phase at this specific moment. Breaks to the downside. So this particular segment, and I'll break this down for you just so that you can see this, is in consolidation, trending, consolidation, trending, etc. So anytime you see a breakout in one direction or the other, that becomes a trending condition. And so you're looking for a trending based strategy trade setup. And we'll go step by step through this so that hopefully you can understand this. So first and foremost, let's look at this area up here. Let's get rid of some of these drawings. So we're going to put a line right up here at the top for this first kind of basic consolidation area. All right. So right in here, price was consolidating and it's just going up and down and up and down and up and down. We would see further confirmation of this if we applied our Bollinger Band, where you get a moving average line repeatedly. That's our technical indicator confirmation that we are in a consolidation phase. But the question that you have to ask yourself is, when does the consolidation end? And even though the consolidation may go to a trending time temporarily and then straight back into consolidation, this is why it's so important to identify the pivot points and kind of keep track as you're going along. So we'll take the indicators back off, again, consolidation. But at this moment here, once price pushes down at that level there, we now have broken out from our consolidation phase. And so we're looking for price to then come back up and retest. So at that moment there, our strategy goes from looking for puts at the top, calls at the bottom, to where now we're saying, okay, price broke out to the downside. This is a breakout. We're now looking for a retest and a continuation move. A continuation of what? Ultimately, a continuation of what? Ultimately, a continuation of the initial breakout direction. So if price broke out to the downward side, now we're not looking for a reversal or consolidation-based strategy. We're saying this is the breakout, so we've chosen our direction right up front, and we're simply looking for price to come back to a given level. And so in this particular case, if we were looking at our basic, M formation, right? There's the last leg. That's our long leg. So our entry ideal location is basically at that level. If you wanted to get a little bit more precise, you could look for the most recent flat bottom, which happens to be, those are relevant entry locations. And so anyway, the point being is that we're looking for a put option. When we see price break out to the downside, we've formed our directional bias. In our process, we've determined price direction. Time expiration, that's your chart dependent. So if we're looking at a 1 minute time frame chart, for Brandon and I, we say, I'm going to take a 3 minute trade. So those two variables we have now predetermined. And so the next question is, okay, is how do we apply our 3-step process? Well, the fact that we have a breakout determines market phase. So that's our step 1, identify market phase. We have a breakout to the downside, so we're looking at a trending condition. Second is to confirm this trade location with a technical indicator. So we can do this through a couple of different ways. If you're depending on which IM Academy service you're utilizing, you can start, for example, in Cash Trap, you can look at the Bollinger Bands. So if we add the Bollinger Band to our chart, we can see that price is certainly on the lower end or below the middle moving average line. And as price comes up to this general vicinity, okay, it's below that middle moving average line. So we're looking for a put option. For the RSI, what do we see there? On that initial breakout, we show that downward momentum. The RSI is below 40%. We can see that even throughout the remainder of this time, we're staying on the lower half of the RSI. And that shows us that we have some downward momentum, okay? Now, with that, so we've confirmed essentially that, hey, we've got some downward momentum. We've got a breakout to the downside. So everything is favoring a put option. So then we come to step 3. Well, what is our trade entry reason? If you're utilizing Cash Trap, it could be an arrow. So you could be looking at these arrows to give you a final trade entry reason. But note how we've gone through a few steps before we considered the arrow, right? And we don't start with the arrow, we kind of end with the arrow. So in this particular instance, we could look for an arrow in that general location. Another reason would be a confirmation candle. This one here is a confirmation candle. This one here is also a confirmation candle. They're both just one downward candle at our area. We could consider both of those. If we took this first one here, it would basically be at the close of that candle there. And this one is literally at the same exact level. So this trade on a fixed time 3-candle rule would have been a break-even trade because it literally closed at the exact same level as when it began. And that's okay. And even if this was up a little bit and that would have lost, it's still an acceptable trade because we followed our straightforward process. Not every trade is going to win. Some people make the mistake, and we get contacted all the time. They say, hey, I followed your rule and I lost a trade, and man, I just don't know what's going on here. It's like, no, there are some losses to be expected. That's a very normal part of trading. So don't be too alarmed if you happen to experience some losses here and there. All right. But that one would have broken even. And the second one, if you take the trade at the close of this candle, so that's our trade entry reason based on our strategy of breakout, retest, right? And then on that one, 1, 2, 3, price closes way down here, and we would win that trade. So a break even and then a win on that particular setup. So where do we then go from here? Well, again, the question is always, we go back to our process. When we look at our 3 steps, market phase, confirmation, and trade entry reason. So as we look at price movement, let's just reset. We say, okay, that trade's done. Let's delete some of our drawings here. Reset your mind. What are we seeing the price doing? Well, if we're looking for a trending condition in market phase, we need another breakout to the downside or to the upside. Has to go one or the two of the two directions. If we're looking at consolidation, we're looking for price to turn around at the same general vicinity as it did before. So right here, as price pushed to the downside and then came up to this level, we were looking for that continuation move in the downward direction. So those are the trades we took. And then we're expecting price to either break below this level or to break above this level for a continuation move. Those are the conditions for a trending based strategy. You have to see the breakout first before you can consider a trending move. For consolidation, we're looking for a reversal, one of these areas, okay? And so as price comes to the lower Bollinger Band area or to the upper Bollinger Band area, we could consider reversals based on this pivot point here and this pivot point here, this pivot point here and this pivot point here. Now, why would we consider that trade? So let's talk about a consolidation-based strategy. Again, if we're seeing that the price is responding in a consolidation range, you want to note, again, where the pivot points are. And one helpful thing that you can do is you can actually draw a line between a couple of the pivots. Most consolidation, one of a couple of 2 basic things. They will either, really 3 different things. They'll either go in a very consistent sideways channel with a relatively flat top and bottom to where the pivot points are, or it will be a bit of a contracting consolidation phase, as you see here, or an expanding consolidation phase where you'll see these pivots will expand just slightly. Not enough to really be considered a breakout, but just to push out just a little bit from the previous pivot points, okay? When it's contracting like here, those are kind of hard for people because the price doesn't push to the outer Bollinger, it just sort of moves, like in this case, one candle and then immediately reverses. And so these are not the type of ideal setups that you want to look for. Mostly you're just watching during the consolidation phase because you're not getting enough confirmed reasoning as to take to the trade other than a preemptive approach. And this is where Taylor Marks and Matthew Thayer's strategies really come into the picture. They take a lot of preemptive trades based upon price level. And this is a strategy that works. They've made millions of dollars doing it. Okay, so it's not that it doesn't work, but there is a bit of an art to it and a little bit of that intuition. And it's not that they know some secret about what the market's going to do, but as they're looking for price to come down to a previous pivot point, okay, they're looking for price potentially to turn around. And in order to take this kind of a strategy and apply it, you have to be willing to be flexible. And so if you're looking for a concrete trade entry reason, you don't always get it quite as often other than the arrow itself in Cash Trap. All right. And so that arrow can give you a preemptive confirmation. It can say, hey, we're looking for a put option at that location. And so they might take the trade based on that trade entry confirmation candle trade entry reason, because in consolidation, a confirmation candle is typically, it's two behind. Okay. It's not that it's delayed, but because you don't have a consistent directional movement, a lot of times the price will just come right back to that area, and it just makes the trade way too close. It doesn't make for a good trade setup. So confirmation candles, and write this down, are typically only ideal during trending setups. So it is part of a trend following or a trend condition based strategy. Utilizing confirmation candles is based on a trend strategy, trending strategy. Okay. So if price is consolidating and you've taken some confirmation candles and you're losing, that's why. Confirmation candles are not as ideal during consolidation phases. All right, so further confirmation that this is in consolidation during this time is when we look down at the RSI, one of the things we note is that this black plot line that's oscillating up and down is just hovering right around the 50% line. It's not pushing down below the 40%. It's not pushing up by the 60%. So what this means as a measure of momentum, it's saying that there's no directional momentum. It goes up a little bit, down a little bit, up a little bit, down a little bit. And it's never really deciding on a direction. And that is the classic signature feature of consolidation, is an RSI reading between 60 and 40%. And the closer to 50% it is, if it's just oscillating around that, that's a very tight consolidation range. Sometimes you can use that concept when you're combining two time frames of analysis. For example, let's jump up to a 5-minute time frame chart. And when it comes to consolidation, this is kind of one of my personal favorite strategies to take. All right, so let's look at this consolidation phase here on the euro to US dollar on a 5-minute time frame chart. This will correlate nicely with cash trap, because the primary chart that you see in cash trap is on a 5-minute time frame chart. So you'll note that this strategy follows nicely with what you will see on this 5-minute time frame chart. All right, so essentially how it works is this. As a consolidation phase strategy, our strategy is what? Let's redefine it. It is to look for reversals when price is at or near a previous pivot point. That is the strategy. Okay, so anytime price comes at or near the previous pivot point, you could consider a reversal trade. How long of a trade do you take? There's a couple of different approaches. Often, if you're preempting the trade, you could still take it for 3 candles. Another approach, if you follow Taylor or Matt, is to do a shorter time frame trade, because sometimes these reversals, as you can see in these red candles here, each time price came up, or sometimes when price comes down to that level, you immediately get some strong reversal activity, such as these green candles here. Okay. Because that is often a characteristic of a consolidation phase, ultimately you can preempt those moves, seeing that, hey, price is at a previous level of structure. We're seeing some consolidation on this time frame, and so long trade based on a 5-minute time frame chart analysis, knowing that they can roll over the trade if they need to. So what they're betting on essentially is that within those first 3 minutes, price will likely go in our direction, and it often does. But there are also times where maybe it takes a little bit more time to go in our intended direction, and so they allow themselves up to 2, very rarely 3 rollovers, and what that essentially buys them is up to 12 minutes of time rather than just 3. If you roll over it once, it takes a 3-minute trade up to 6 minutes, depending on the broker, and then up to from 6 minutes to 12 minutes if you roll it over a second time. So you're effectively getting up to pretty close to 3 candles worth of time based upon their strategy. And so again, because there are many different strategies, it's important to note what they're doing and the thought process behind it. So essentially, if we were following this, here's kind of one way that I like to approach this. So as we see price begin to oscillate, note how it's crossing over our middle moving average line. What does that tell us? That's telling us that we're likely in consolidation. This is further confirmed by looking at our RSI plot line here, the 60 and the 40%. That's further confirming that price does not have a lot of strong directional momentum. And so if we add a couple of arrows here, we're just going to put a couple on the chart. And then what we're going to do is we're going to drop down to a 1 minute time frame chart. And I'm going to show you how you can combine the two time frames utilizing the consolidation phase of the 5 minute to identify a trade setup based on a 1 minute time frame chart. This is kind of a top-down analysis type of approach, but this can give you a good idea for how to take these preemptive trades based on a consolidation phase. All right, so we've identified essentially where these arrows are, where these turnaround points based on these previous pivots. Okay, and we're not just arbitrarily choosing times where the price happened to go in our favor. We're literally choosing moments where price came to a previously known pivot point during a consolidation with confidence and accuracy say that we would be looking for a trade at that level. Okay, all right, so now as we drop back down to a 1 minute time frame, we're going to see more data. It's the same basic stuff, but we're just seeing more candles. We're going to get rid of just a few of these lines just so it doesn't look too messy here. Let's get rid of that. A couple of these circles here. Okay, so you can still see our arrows and where price is looking to turn around. So as you look at these locations, note how the price correlates with where the price had previously turned around. And so at this point, one of the basic strategies that you can take is to then use for an overbought, oversold base conditions. And this is where price pushes out beyond either the lower dash line or the upper. When it's below, that's oversold. When it's above, that's considered overbought. Okay, and essentially what you're looking for is for that line to begin to cross back down through the either the red dash line or the green dash line. Now the settings that you utilize this strategy for are going to be slightly different than what we use typically for the RSI. So right now we have our settings at 60 and 40%. So if we want to use overbought and oversold, like in hourglass here, note how these levels are set to 80 and 20%. Okay, so I'm just going to switch this here on our chart just for the sake of showing you this example. So we're going down to our 60. We're going to change this to actually on the RSI side, we're going to do a 70, and we're going to do a 30. Okay. So what that's effectively done is it pushes that red dash line and the green dash line a little bit further out. So now we're at 70, a little bit further out. So now we're at 70%, 30%, and we're looking for price to reverse. And so we already know on a 5 minute time frame chart that price is in consolidation, wherever that went. There we are. Okay. So we've predetermined that based on this time frame, price will likely turn around when it's up. Or up at these previous pivot points or down at these, breakout yet or whatnot. So we're in consolidation on an M5. When we drop back down to the M1, once price gets down to those areas, we're simply looking for the RSI plot line, or you could use stochastics as well to get into the overbought or oversold regions and then cross back in. So in this particular case, we certainly get a confirmation on this one here. A couple of these others, it was still inside, but here's a secondary way, strategy dependent, that you can use this. And that is if the plot line is inside of the 60 and 40 at that moment, you can take the trade. Okay, so either look for it to be inside of the 60 and 40. So this, in this case here, it's outside, because our 40% is basically right here at that level here. Okay, and 60 and 40%, again, that's our measurement of momentum. If it's inside, it doesn't have good directional momentum. If it's outside of that, there is some directional momentum, and so we wait for the plot line to cross back down or on the red dash line or cross up through the green dash so that we know that the momentum has changed. All right, so on this particular example up here, we don't get in this trade until this moment right there. I'm going to put vertical line there. I'm going to put vertical line where we have the cross down of that black plot line through the red dash line. We have justified this trade because we've identified that on the M5 chart, we're in consolidation. We're at this previous pivot point here. And so because we got the cross down, because it's above our 60%, which would be way down here at this level, it's above that. So this is a lot of upward momentum. So we don't want to immediately just take that trade, right? Because above 60% means that's upward directional momentum. So what are we waiting for? That plot line to cross back down through the 70% line. And so it's at the close of this red candle here that we would actually take that trade. And so that point's our entry, 1, 2, 3. Price closes at the close of this green candle here, and we would win that put option trade. Now up here, as price pushes up to this level again, we actually had a couple more opportunities in this vicinity. Seeing that price has pushed up to the upper Bollinger Band line. It is right at basically that 60% level. We could, once again, because it's slightly above, we could wait for it to cross back down through that 60% level. And in which case we would be entering at this red candle here, close of it, 1, 2, 3 candles, price would close down here, and we would win that put option trade. So essentially what we're showing you here is a difference in strategies. We're talking if one strategy is consolidation based, the other is trend based, trend based. Breakout and retest. If we see price breakout from a previous pivot point, such as here, price comes down, comes up, and then we see that breakout to the downside, that breakout means that I'm not trying to predict the overall market direction, but what I'm saying is that this breakout is essentially telling me that we have a potential trending setup forming. All right. And whereas if we're seeing, and I'll delete some of these drawings so this isn't so messy here. If we're seeing that price is consistently crossing over our middle moving average line and we identify that we are in consolidation, then the basic setup is to look for reversal trades at these previous pivot points. So we're establishing up front, whenever we look at the chart, are we in a consolidation phase? Are we in a trending phase? And that is the type of setup we want to look for. Either a reversal trade for consolidation at a previously known pivot point, or at or a breakout and a retest type of a setup in trending conditions. Okay, those are the two basic scenarios, and the whole of the market can be summarized in just those two ways. And now, no matter how many time frames you compile together to compare, etc., ultimately it all comes down to these same basic principles of, are we consolidation? And if so, we're looking for a reversal trade. Is the market trending? If so, we're looking for a continuation trade.
All right, that was a great video. Hope you guys got some out of that. I recommend watching that over and over and over again to help you master your strategy. Also for a refresher, because again, as you continue in the trade, you always want to refresh yourself. So that's a great refresher video, and also a great video to help you get better at trading, and also using the RSI, which I don't use, but it seems like a good tool to use. Wow, look at that candle. That's a very large candle. Wow.
Red folders on USD and CAD at 8:30.
Yeah, I'm not even trading today.
Yeah, I'm looking at Brandon, but I'm gonna try to do a new strategy with flat tops and flat bottoms and see how it works.
Yeah, I think that's a good idea.
I just tried one just now and it cleared.
Mm-hmm.
So I'm gonna start to journal it and see how it goes.
Okay, that's good stuff.
We're going back on demo for that.
I ain't mad at you. Yeah, red folders, and then plus the NFT week. So I'm not even going to trade today. You kind of broke up, Emma.
I said, and today is Friday, so it's a terrible day all around.
Yeah, so I'm not even trading. I'm just looking right now.
Yeah.
Not messing with that, of course. Just trying to see if I see anything consolidating. So that's the breakout he was talking about right there. You got the breakout and continuation. Just trying to go over some stuff we just learned on that training. Again, consolidation. That was a long period of consolidation there. Finally a breakout, but that's because of the red folder. So skip all of that. GI, same thing. Yeah, all this looks crazy. Slight consolidation there, like he showed us, and then we get the breakout. I already got a box here. Up, down, up, down, up, down. Then then you got your breakout there, and a continuation. So what he's saying does work. You just got to take time out to kind of draw it up and look for it.
Yeah,
But
you
there's the
definitely have to
breakdown.
watch. You definitely have to watch that video a couple times.
Yeah, I would definitely recommend watching it again, and also have your trading view up at the same time on if you have two screens, and you can kind of follow along what he's saying. Maybe pause the video, draw
Yeah,
what he's saying out. That may help. But what he was saying was definitely, a lot of value, and definitely it can help your trades get a lot better by using
yeah,
those two strategies. And then you want to add on the RSI or the Bollinger Bands, go ahead. I don't really like using that stuff, but I see that it
yeah,
can help you trade though. You just got to like really work with it. And I think Cash Trap is also a good tool to use as well. But of course, you got to pay for Cash Trap.
yeah.
You know. Emma, you use Cash Trap, don't you?
No, when I was in IM last year, I had it,
Okay.
and I didn't have much success with it, so I didn't bother to buy it again.
Okay, got you. Okay. Yeah, same here. Yep. So I think though the basic strategies of the consolidation and the trending strategy is way beneficial, and you can definitely master your craft with that SRT and
Yeah,
using. Mhm.
this is the best. This is the best that I have done.
Okay.
Um, and even trading by myself with the confidence, and
Hmm.
that is basically on SRTs and maybe the fib using the
Yeah,
fib
yeah.
handle as well.
Hmm. Definitely with the fib. Yep. So here we are. We got the same thing. Got consolidation here, and then finally your breakout. So basically, you'll start to see these things with a naked eye. The more you start, watching the training videos and going back looking at the chart, because here's consolidation right here. So you could have taken a trade here, up here, down here, back up here, then finally you got your breakout. But
Yeah,
like he's saying, just be careful. And what I do, I'm gonna be honest about this. What I normally do, I get into my trade at my line. But after watching his video, he's saying to wait until it comes back in a little bit, then you take the trade. So that right there gonna be a little, I guess, some work for me to do on myself because I'm used to taking it when it gets into my zone, not
yeah,
waiting for it to like go through the zone and then take it. But I'm gonna try it out with a demo or test trade and see if that works better, because sometimes it will go out of that zone, and I may lose my trade because I don't roll over that much. So like right
yeah.
here, if I would have got in at my line and it came all the way to 460, you know what I mean? I would have freaked out and said, oh man, I'm gonna lose a trade and not roll over again. Um, I'm saying, I'm just keeping it real. So I'm gonna try to kind of wait for it to go through the zone a little bit and then take my trade, kind of like a confirmation trade. Like he was saying, I'm gonna try it out. If it doesn't
Yeah,
work, I'll go back to what I like to do, which is wait till it get to that
yeah,
point and get in my trade. But again, you got to be open to other things and kind of be a sponge to this in order to get better.
yeah.
Always be a student. So anybody got any questions or they want to do some chart markup? Other than that, I'm going to end the session because I'm not going to do any trading because
Yeah,
of
right. I'm on my phone anyway because my internet is giving a lot of trouble. We're having some bad weather.
okay. All right. Well, guys, this is day 27. We got 3 more days. So next Wednesday will be the last day. So I'll see you guys on Monday. Have a great weekend. If you're a mom, happy Mother's Day to you. Enjoy your weekend.
I enjoy one
All
later.
right. Take care.
Yes, sir.